See if that works. There we go. Make sure not too blown out here. All right. Let's bring up Twitter. Let's get some folks in. This is an open format tonight for people that are going to be joining from the interwebs or catching this after this stream. No worries. There will be chapters added as we explore different pieces of content tonight, and have kind of an open discussion. I was going to have a different video for you guys tonight, but there's just so much going on in the space right now that I felt like we just need to have a live stream. There is, I could have had a video on the Poly Network having its big hack today, but I'm still trying to run down all of the known on those, on that whole entire issue there. It looks like the Senate passed the infrastructure bill without the crypto amendments, so now it goes to the House. There's a lot going on in this space right now, but I want to talk through a couple things of what we got coming up and let you guys know kind of, this is full court press for BBT and crew. We got, I'm going to have another intern person starting tomorrow. I'm kind of prepping to help go to, more than likely work for a farm down in Texas, but it's somebody with no experience, like zero, nada, zilch experience. And I'm kind of taking them under my wing. I'm going to teach them a lot of basics, fundamentals in the mining space in general, and kind of prep them for, a fall, entry into a crypto job. So helping out a few other friends that I know that run in this space and have large farms and just need people. There's people needed all over this country right now in different roles and different jobs, and it's just hard to find people. So one of the tasks that I usually would do when running, especially large programs, is when you run into a personnel crunch, sometimes you just have to take a chance on new people that are willing to learn. And I've always told people that are project managers, or, you're responsible for some task and you're like, we need to find the people that can do this task. We need, people that are trained on it. That sometimes you can find just a few people that are pretty strong. And in that interview, you ask them, hey, would you have any problem, or could we, if it's a compensation difference or any of that, can we have you help train some new folks, not to replace you, but just to augment your abilities? So that's effectively what I'm going to be doing with the new intern that doesn't know much about crypto space. And in that, I'm going to be walking him through this, and we're going to be recording some of it. So you guys, for the new folks that have no experience at all, I want to have that organic exchange of the questions that come up, the questions that'll come up after I explain something. They're like, yeah, cool story, but I don't understand that. I think it's going to be an interesting, capture on somebody that's very vanilla in this space, and then just trying to explain and articulate it as if I wasn't on stream and I'm explaining to people. And anybody that's been in this space for a long enough time, think of your version of the way you explain things to people on your best understanding of the way things work. And most of the time, if you have pretty good confidence in something, you're going to articulate it in a way that hopefully communicates it effectively to them, to where they're like, you know what, I think I understand that. And you're going to use analogies and all that kind of stuff. So, excuse me, as I start to kind of go through that with him, and we're going to start tomorrow about midday. He's just coming over during kind of a lunchtime for me, and we're going to use that time to kind of get him just a basic understanding, and we're going to record that. And then we're going to have this in a series of kind of a crawl, walk, run for you guys of like how he's adapting to it and understanding it. And then we'll go through some examples, and we'll get into all the way down to building a mining rig, and then what parts go with what, and then what are the lessons learned? What are the mistakes that I've made over time and learned from, and just watching and listening to other people and their approaches, as kind of a best practice. So this is kind of a training through kind of best practice and knowledge. And I think that will be some very good content for you guys to be able to also, if you're new to this space, or if you share, the love for building out mining rigs and stuff, and people see that and they're like, hey, I want to build my own. And you're like, you could build your own, but there's a lot of like effort. Anybody that's built their own mining rig understands that, okay, I think I got the basics, and then you'll start to learn other things with it. So then when somebody comes up and approaches you like, hey, I want to do that too. It's like, well, there's kind of this thing you have to go through. You have to watch a lot of videos. Some of them are super boring. Some of them are okay. But like you got to start somewhere, and then you kind of work through it, and then just call me when you have issues type of thing. I think if we can have a series that's really around somebody that's new and kind of follow that, that'll help also any new folks that are coming on board, into this space. And there's a lot of different opinions on it, and I wanted to kind of talk with that with you guys today. I mean, some people are like, hey, ETH mining is going to go away. There's a huge amount of ETH miners out there. There's 600 plus terahash out there. Where's that going to go when proof of stake comes? Things like Raven and Ergo and ETC and some of these coins that have some hash rate, when we've covered it in the mining model, what's the force projection of, something that's almost 20 times the size of some of those networks moving over to them, and what happens to them? What's their price discovery need to be, and that kind of thing. And, I've tried to explain that a few times of what would have to happen from a price discovery standpoint, of where levels would need to be able to support that, to kind of back into that. But at the end of the day, what it comes down to, and what I've learned since being in this space and mining since the very beginning, is that there is this kind of culture around the mining, including GPU mining, that creates a micro ecosystem of buyers and sellers of that. So you always have this massive interest around it. And then with that massive interest, there's other ancillary benefits that come from that, where other people that see that interest, see the buying and the selling of the hardware, they're part of already exchanges that have high amounts of liquidity. And those exchanges that have liquidity, people that have listed them on exchanges, some of these coins and tokens, there's just this natural, if it's botting, if it's people that are just taking a speculative hedge on something, there's always some level of a market. Now, some of these coins have just tanked, and they've been either outright scams, or they never really had any kind of backing. It was kind of a run on to try to take people's money. But there are some very good projects that have very talented developers on it that are trying to make a difference. And the only way they can make a difference is they have a other collection of folks that they've met with, and they've centered around a particular project. I always bring up Ravencoin because I've seen that very early with Ravencoin, where it had a little seed money from Overstock and Medici Ventures, which gave them a good baseline, but then also promoted a lot of open source developers, had open source meetings, and had a vision and a path of where, the group that first started working on Ravencoin wanted to go, from restricted assets, having IPFS integration, structure around like the UTXO layer one, not so much trying to get into, smart contracts and stuff that's in layer two. That development that brought people, again, all of that being its own ecosystem, and you have various people that will then build onto that, and then you have this like micro version of what we see with like Ethereum and Bitcoin that are doing real development. Now, some of these team members moved to different coins back and forth. I've seen developers move from, there was a handful of folks that I knew from that were working on EOS and they try to make EOS work, and there just was a lot of issues with it. And those smart developers moved on. A lot of C++ developers, they moved on. Some went to Tron, some went to try to do some stuff with Bitcoin. Some of the other ones went over to Ethereum and learned Solidity. So it all comes back down to the ecosystems that kind of thrive around these different tokens. And as miners, you want to know what you're mining and what's its intent, and that, to see, are they actually trying to improve some kind of stack, and what are the use cases, and then from that you can see a potential. And then again, it's still a speculative play. And some of the coins that people ask about all the time, like, hey, why don't you cover this or that? Most of these coins that you guys ask me about, I look at briefly, and I look for a few things. I had a question today on Twitter about Ergo, and I've had a limited amount of research with it, but I was, and this is nothing against Ergo team. There's developers, there's a path, they have a roadmap, they have a pretty decent following, but it has like a baked in fee and marketing fee, like at the protocol level, to where the devs are getting paid and right out of the protocol. And Ethereum had a raise and the core developers got a windfall. And at the time it wasn't a huge amount of money. And some of them are also still being paid by consensus, right? So there was, the ETH Foundation, people paying for salaries and stuff, and people need to eat and they need to have an income. But when you build it at the protocol layer, it's just, it's an immediate turnoff for me personally, because of the way incentive structures work. And it's kind of the argument that I've had on the proof of stake with regards to the withdrawal speed, like meaning like when are they going to write the code or the specification on how they're going to withdraw, have validators be able to withdraw tokens, or spin down and be able to withdraw your ETH. Based on the structures that it is right now, there's not a huge amount of incentive for them to do that. If the infrastructure gets a layer of like a derivative layer, to where, like, let's say you're a validator and you have the option with how you're doing your validator, if it's part of like Rocket Pool or one of the other pools, that they will loan you out your coin without ever spending down your validator. Effectively, they're buying it, or they're putting like some kind of like BlockFi thing where they're giving you pay back interest to get your coins back. If that infrastructure gets I think the incentive's there to build that infrastructure on top, because you can't withdraw and people are going to need to withdraw their money. And then with the burn, you're going to have this situation where the price is going potentially up very high. Where is the pressure now sit with long-term holders telling them, or putting a lot of pressure on the core devs to, like, hey, put a pause on that withdrawal because we don't want any more Ethereum in the supply. And I think there's a broken incentive there. Like, there's going to be pressure to like boot that down and, oh, take your time. In the same way that people would look at us and say, we're telling them to take their time on proof of stake because we're still mining. I know that's a double, there's two sides to that, right? Some people are like telling us, going out there and saying, take your time, don't just go straight over to the merge. Because that incentive for us is that we would stop mining ETH. But the difference is that we are not lockstep. GPU miners are not lockstep 100% with ETH. Like, we literally can mine other things, and those other things right now happen to be worth, depending on your power situation and the type of cards you have, in some circumstances are a better output because of the burn in 1559. So we get this weird set of conflicting, things to where we're not necessarily locked in to required to mine ETH. We can go mine other things. So there is a disjointment on having to be locked into Ethereum, where the devs on the other side, on the POS, could be incentivized in a way to take more time because of risk avoidance, thereby not withdrawing the coins and stuff. So that's a long way of going of saying, like with the Ergo stuff, is like if you have it built in at the protocol layer, it starts messing with the incentives. So if Ergo went up hugely in price, like let's say it went bananas and it was worth hundreds of dollars a coin, and they're getting a certain amount of percentage. I don't even know what the actual percentage is. Somebody could say it in chat. Let's say it's 12.5%. Or it might be 5%. I don't even know what the percentage is that the devs are getting. If that fund gets so large that, and how that distribution works with them, are they incentivized to keep working on it or not? Or do they have to find new developers because there's a lot of turnover because there's huge windfalls for people? And I've seen some inkling of that in the ETH ecosystem with some developments, folks that have worked in it that have been early. They've built a lot of fundamental stuff with this ecosystem, and they were also deeply invested in it. They were paid in ETH, they were paid in some of the other tokens, and then those tokens go up exponentially. And then now they're like, yeah, bro, like I don't need to work anymore, so I don't want to do this anymore. So it all comes back down again to incentive. And not saying that everybody out there in the world stops doing stuff that they love because of money. I'm going to tell you right now, I do this every day and I would not need to, but I love it. And I couldn't imagine doing anything else besides this. I'd be super bored, in the crypto space, if I wasn't part of this and going through this journey with you guys together. So I think there are the few people out there that are just crazy in the head that will still, no matter what, still work and try to drive value for people in that interaction. But Ergo and a few of these ones that had like incentives built into the protocol level just kind of concern me, because I look at it, even if they have the best intentions, I don't know if it disjoins that incentive to really drive value to it. And I could be completely proven wrong on that, by the way. I'm not taking shots at Ergo at all. I'm just saying, for the way I look at it, the incentive structure on that, it's where I'll draw concern. Dash, I think, took a different, I'll use Dash as an example. It's a hybrid system. It has staking and proof of work. They do their dev fund via like proposals. So there's the proposals have a bounty, and then it has voting on it, and then people can vote on the features that they want. So there's different governance models there, and I think a lot of them are experimental to see if they work or not. Dash has also had a huge marketing budget where they were, taking part of those early coins from like dark coin days for the OGs out there that remember dark coin, which ended up ultimately turning into Dash. There was some concern with that kind of pre-mine that it had and where those coins were going to go because only a few people had them. And, seeing what's happened with those kind of pre-mine kind of situations is just really, that's why I don't talk about a lot of other coins. I mean, quite honestly, guys, if I see a project, one of the very first things I look at, was it fair market launch? Can I mine it? Is there any kind of protocol, wired up thing that isn't taking the distribution of that and giving it to the people upholding the network? So those are kind of the first core three things. If I see any of those, I don't immediately throw it out, but I kind of look into it a little more and try to find out who the developers are, what's the roadmap, what are their deliverables, that kind of stuff. So, if you're looking at trying to understand a project and what it's doing, it's good to understand its consensus mechanism. It's good to understand, is there an upper bound on its tokens? Has a whole bunch of tokens already been created? Who has those tokens? How are they getting spent? How is it and some of the newer, forks, if somebody took Ethereum and took that kind of model, like that pre-ICO model, where they printed a whole bunch of tokens and had a pre-sell, that kind of thing. Who had access to the pre-sell? Those are the kind of things that I look at on new tokens, because I get asked a lot of questions on new tokens, like all the time, like, hey, what about this? What about this? So I wanted to make sure I was addressing that. All right, I've been talking about 20 minutes, just kind of right into it to let people come, kind of come into the thing. Let's look at and see if you guys asked any questions or anything. You guys can start re-asking them. I'm paying attention to chat now, not just talking. See Gary Mott says, yeah, Darkcoin, aka Dash. Yep. I had a crypto, like an odal to crypto back in 2014. Some people would remember that video. And that I like going back to that video because that video is just kind of a highlight of all the tokens and coins at the time. There was only a couple that I didn't include in that. I think it was Mastercoin I didn't put in there. And maybe Stellar. I think Stellar was just coming out around then, maybe. But I had, pretty much everything that was in the stack at the time back in 2014, and Darkcoin was one of them. Feathercoin, Peercoin, Peer and Cure Coin, for anybody that remembers that. Let's see here. Let's see what you guys are asking here. This is an open format tonight, guys. No crazy stuff. Hey, Bits Polyhack, can you cover that? So I've been researching it. I actually made a tweet earlier that was tagged the wrong Polygon. I tagged Polygon Network, which was incorrect. It was Polynet, and I deleted that tweet because I was like, I didn't want too much more confusion to happen on that. I had tweeted the wrong Polygon. I tweeted Polygon versus Polynet. So yeah, there was an error in their smart contract, but it also looks like there may have been only one person that had access to the private keys, and it either through an exploit, somebody was able to essentially sweep a lot of those tokens, about $600 million worth right now. Tether, I believe, froze $30 million in their token because Tether is centrally controlled when it comes to the Omni network. I don't know if USDC did anything. It can be frozen though on their network. Risk of DeFi. Yeah, I mean, so it all comes back down to fundamentals, and that's part of what I'm going to be covering with the new intern. His name's Ray. That will cover, and it comes down to whether those risk, what is the fundamentals when we start talking crypto? There's a very basic layer, and I would call it kind of the first principles, where it is you either have the key or you don't. And if you send crypto to somebody else, even if it's in a smart contract that's supposed to be not being able to be touched, somebody else has that admin key. There are exceptions with certain types of smart contracts that may have a time lock or have some other mechanism that prevents anybody from doing any core adjustments. It would be an append only type of thing where you kind of supersede, and it looks for kind of that supersede mechanism. But most of the time you'll have multi-sig access to a particular smart contract if it's deployed, like let's say on Ethereum. Or they've done it to where, like in this case, it looked like there was only one core signature, even though it was a multi-sig. It only had one signature in it. And there's risk there, obviously, if somebody gets a hold of that and then can start sweeping funds. Seeing some subscribes. Yeah, hit that subscribe button, my dudes, on YouTube. Let's see what else we got here. And there'll be more on that Polynet. I want to make sure that there's some good research going on right now to try to track down. I think there was somebody that did make a Medium post and explained where at in the smart contract it looked like they executed it, but it's still, if I read that correctly, they still needed to have a private key access to actually execute. And that's part of the concern, is where did that come from? But again, if it's not your keys, it's not your coins. It's the same thing with some of these other networks that you're locking up liquidity in. Is somebody going to be able to sweep that? these newer, especially the bridge and the router style networks, when we talk like Uniswap, where you have interoperability between chains and there's implementations on each side, because each chain essentially have an implementation and it's essentially a bridge. Is one of them exploitable? And does that not impact another chain, or is it just on like the Binance Smart Chain? Because Binance Smart Chain's had some issues too. Or is it, is it on Polygon itself, Polygon network in this case, which uses like a Matic token for its transactional, or on Ethereum itself, which then you used a range of wrapped tokens to behave in and out of dexes. There's a lot of moving parts on this, and I had a DeFi series we were working on. I started getting into kind of the deep dive on that with you guys when it came to like the dark forest, and then some other things came out with MEV, and we covered some of that, and then we've been doing the farm update also. So I had a couple things going on in flight, but coming back through and working through that with you guys in a crawl, walk, run way, I think would be a very good video. Just continue that video series in the DeFi to kind of explain that. I mean, there's a lot of things out there that kind of show, like people that have made videos that show kind of how, but I want to actually, if I'm doing it and covering it, I want to take you guys like literally through what is going on when we're talking like coins that are interoperable, like how's Binance Smart Chain work with regards to how it hands off and exchanges over to like Ethereum. Like what's the wire diagram look like on that, and then explain that stuff to you guys that way. I think like an architecture view and what dependencies am I relying on, and is it inherited code? Am I calling somebody else's code? That's all important stuff, because I think when we hear about these like exchange hacks or DeFi hacks, we center in on the company that's holding the keys. But is there other risk from dependencies? We already know that Infra and a few other Oracle services are very locked into a handful of smart contracts out there that make a lot of things work when it comes to like pricing and discovery. And there's a lot of interdependency on a lot of this smart contract architecture that I don't want to say is stenciled up, but there's, it's happening at a pretty rapid pace. And, there's an old saying in development that there's nothing like testing in production, right? And that's effectively what happens here. And there's a range of reasons why crypto, by and large, seems to not get past this, where everything seems to be tested in production. A lot of it has to do with the behavior and the use case and the volume that is done on production on the main net versus the test nets that are out there that don't have the robust, setup, like proper test setup, that are just like little micro versions of what production is. Like you can't go out on the test net and there's like a full replicant copy of like ETH's main net out there, right? As if we're using Ethereum as an example, like it doesn't have all the smart contracts and all of the metadata and the state and all of that. Like in like traditional, app development world, if you lost your baseline, that's what that's considered, is your baseline. I've seen it where we take everything from production and we just clone it back down minus some of the data, but the configuration, the settings, and all that kind of stuff. So them taking like something like ETH and then trying to reverse engineer it to where can you run exploits on testnet to see where you have your weaknesses. Most of this has just been fallen on the reliance of security blockchain groups that have to peel it apart and actually step through the code and create their own little assertions of what they think is going to happen if they do a proper audit. And those audits are expensive because they take time and it takes data scientists to run through it. And then you're talking about if you're kind of rolling your own algorithm in that, especially if you're doing like automatic market making or DeFi stuff. It's complicated stuff. And you have your basic use cases, and then you have like these edge cases where people are exploiting. Bro just went off on a tangent. That's what he says. Dude, if you're new here and you've not been on one of my live streams, I can tangent like the best of them, my dudes. I know you guys got some more. What's everybody up to? What else is going on? We had the Senate pass the infrastructure bill with no amendments. So there's all the bad crypto stuff's included right now, and it's going to be heading over to the House. I did see one of the senators getting ratioed pretty hard on Twitter about that, where people are saying, we have long memories, that kind of stuff. We'll see how that goes down. I think that, again, I have pretty good faith that it's going to get that will be nullified in the House. I just can't imagine them pushing this crypto bill through and then having the blowback that's going to come with it, because there's no way for the current bill to stand on its feet and people to be able to comply without having extreme disruption. So I think that having it tied to the hip to this thing, because it's just the way bills are passed in this country, we'll see something come out of it where they'll take it off the drawing board and look for the next thing, or they'll go with the lesser of what was brought up by Senator Toomey. Is it true the House will not be back for a month? I don't know their actual timing. I haven't been paying that much attention to it more than just where the status is. And if you guys don't follow people on Twitter on that, man, I try to retweet some of it, but there are some really good follows on Twitter to kind of keep track of it. I've, shouted out Jake Travinsky. I mean, he's solid. Coin shares folks that are in there are also solid follows on there. And from that, you'll get, it's kind of like a spider web of people that you'll see that are on that topic in general, that are given literally live updates. I mean, Twitter is probably one of the most powerful tools on the planet. I know there's a love-hate relationship for people, but if you take it from a signal noise kind of perspective, to where I want real-time access to real people instantly on where the pressing issues are, it's an unbelievable tool. Like, unbelievable, because it's the not having to be directly connected to them to be able to get connected to their feed. And that's Twitter's most powerful feature, is that if you have interest in a particular subject or something, and somebody has a subject matter expert in it, or they're just really good and they're opinionated, and they leverage the tool, and then they let you know a particular whatever at that moment in time, you're going to get it instantly because you follow them, and you can narrow down to see if they've said anything, have them on an alert, that kind of thing. BBT, are you using US-based pools? Yes, we use US-based pools for everything. Ethermine is kind of our go-to for Ethereum and Ethereum Classic. 2Miners is where I mine to with Ravencoin. What's my take on LTC? I've always loved LTC. I know Charlie Lee, met him a couple times in the space. I still use LTC. LTC is still one of my go-to. So here's the thing about something like LTC. Not a huge amount of development, cloned from Bitcoin. Second coin ever made, has a long history, has a limited supply. It's very quick. And probably the most important thing about LTC, it's literally on almost every single exchange on this planet. DeFi, wraps, the CeFi on every exchange, massive amount of liquidity potential, which means if you're moving something over to it and you're trying to transfer in between exchanges from a confirmation standpoint, it's one of the fastest things next to Dash that has a pretty good amount of volume and size. Dash, because of some of its privacy stuff, had been pulled off of a few exchanges, which I remember seeing some of the stuff from the folks in Dash saying, whoa, like, while we have privacy features, you don't have to use them on the exchange, that kind of thing, to not get pulled in, like kind of a Monero thing, from like a reporting standpoint. But Litecoin's always had that kind of low cost of fees, easy transfer, accepted everywhere. It kind of gets the benefit for being the second coin and having that early grind that Charlie Lee did in, the 2013, 2014 days. And just it had adoption. There was an old joke, this is going way back, from exchange days when Mt. Gox was a thing, and one of the biggest jokes was Litecoin's going to be on Mt. Gox. It was kind of the rolling joke, because I think at that time it was only a couple exchanges out there. It was Mt. Gox and it was BTCE, and BTCE was like the place where Litecoin was at. Ultimately, I ended up getting shut down for a whole bunch of issues, but mainly around the main operator of BTCE being I don't know if he was the reason or part of the person that hacked Mt. Gox, but was either fencing the coins or part of it. I don't remember what the full punch list that they got him for, but Litecoin was on there. But there, a lot of people were looking for it to be on Mt. Gox before Mt. Gox went down. LTC is to silver to Bitcoin's gold. I mean, that was the kind of pitch that Charlie always tried to do back in the day. I just look at it from a usability. Like, it's everywhere, and it's extremely quick, and it settles fast. Oh, don't even get me started on Cryptsy, my dudes. Almost all of my Dogecoin that I ever mined was on Cryptsy when it went down. It was actually one of the largest reasons why I don't keep a lot on any exchanges. Cryptsy, I lost a lot on Cryptsy. I mean, a lot on Cryptsy. Big Vern got me down. Yeah, Cryptsy owes a lot of people money. I didn't have, there's only one other exchange that I can think of that I had. I had some money on Mt. Gox. It wasn't a ton, but it's a ton now. It wasn't a ton then. And then there was one more. It was the one that was in the Netherlands. It was like Cryptsy. It was Cryptopia. I had FTC. I had moved Feathercoin on Cryptopia. I had some ETC on Cryptopia, and I had all of my Ethereum. Electrum. I had Electrum on there, and I think eGem. If you guys remember eGem, I was mining eGem for a little bit. I think eGem was on there too, but I had all of my Electronium on Cryptopia when it went down. Don't tell anyone that you mine. I mean, it's a bit late for that, bro. It is what it is. Gary Mahana says, all of my Potcoin, my dude. Potcoin. Was that Dennis Rodman that was pitching Potcoin back in the day? He had the Potcoin shirt. Or he had when he went to go see Kim Jong-un. He was wearing that Potcoin coat. You guys remember that? How would a hard fork affect staked coins? Adolia with that $5 super chat. Thank you, sir, for that. Or Madam. So hard fork, soft fork don't matter as long as there's not a consensus split. So all a hard fork would be, and it's gotten a bad connotation because of the splits that happen usually with hard forks. But all a hard fork is think of you're driving down a road you're driving down a road and there's a Y, and if enough people have the consensus to make that left versus a right, then everything in that bus and that train, whatever, makes the train, it makes the turn, right? So on a hard fork, as long as there's not a huge consensus split, nothing happens from that, from like staked coins and all that kind of stuff. If you had a split, then you effectively are duplicating the network, and all it is that you would have the private key on both sides. So if you think about the split that's happened on pretty much any hard fork that has not had heavy consensus, is you would just have the private key on both sides of it, and then you'd be running two independent nodes, and assuming that there was development on the other side of the split, people would modify certain settings to denote the difference between the two, and then you would have the ability to extract value from both sides, provided there was, some kind of network interchange between the two, if it was DeFi or if it was a CeFi that was supporting it. But that's all the fork does. You would still have it on both sides. But most people on those, and then there's like poison pill stuff. So like as Ethereum moves to proof of stake on the consensus side, and ETH 2.0 really starts to spin up, ETH 2.0, no matter what they say from a consensus standpoint, and how much more proof of stake is a rival system to proof of work, it's a lot more federated than it is decentralized, because there's so much more incentive. You're making a different relationship with the network. Like there's mechanisms within proof of stake, at least the ETH's implementation, that they can, if you don't play by the rules, you can get your stake slashed, which is the equivalent of having a multi-signature relationship with the network where you don't own the full key when you're staked, right? Because they need to have the ability to reduce your stake. They have to have the ability to penalize you. So while you have full access to stop your node, and if they did implement where you could remove your coins on Beacon, using Ethereum as the example, then you could be like, I'm done with you guys taking some of my money, and then you could just take your 32 less whatever you were penalized for. So you can't do that in proof of work. It doesn't work that way. If you make a multi-signature connection with somebody, and let's say it's a three-way, and then the other two parties are like, nope, we're taking your money, bro, then that's something different, right? Because you've had 2 of 3 as the qualifier to move those funds. But yeah, you're not, it's just a different relationship. ETH 2.0 just seems crazy that people are adopting it. Well, ETH 2.0 is a different thing, right? So it's always had a vision to move to this faster, more accessible, address the trilemma where you have either decentralization mixed with like the speed, right? So you have a trilemma which really comes down to speed, transaction speed. I don't know, I should bring up the trilemma because I'm drawing a blank, and I should not be drawing a blank on it. But bottom line, you're giving up a little bit of decentralization for a little more speed, and you're making a relationship with the network to where the incentive structure works a little differently, to where they can penalize you. But on that behalf, you're getting these other access to other features that you can't get with like a Bitcoin network, or UTXO layer 1 kind of network, or ETH 1.0, where you have like the incentive structure and part of the block production. You have consensus driven by miners. You have the miners are a contributor to that, because nodes in general, what really matters is the nodes, right? But miners can get, like we've seen with Bitcoin, miners can lose that battle if enough nodes say, no, this is the longest network, and there is some miner support on that. But, to just join your mining network is usually a pretty bad thing. So, the consensus on staking is a little different, where there's a lot more incentive with whoever is producing the features and code to where they can greatly kind of incentivize people to kind of follow the path, the critical path, as it were. So if they're going to release new stuff, then the consensus of the nodes they're going to produce a node and say this is the new reality. Everybody should move over to it. And then if it's going to be interesting in that construct, because if a node is not participating correctly, they can get slashed. So it's going to be like kind of like not holding a gun up to your head, but like, hey, we're going this way and you're coming with us. Otherwise, we're going to start slashing you. And that's interesting in a context that you can't withdraw. So there's also that kind of a factor. I don't think they would ever do that. I'm playing the game theory of it. Like, you have to accept the way or whatever development's going to occur after the merge, and you can't withdraw. If there was new changes, you kind of just accept them, because you could spin down, but you can't withdraw your coins. So it's a very interesting conundrum there. And then once you can withdraw your coins, then yeah, you can make the choice and just spin your node down. But yeah, I'm not against proof of stake. I'm interested in figuring out how it's actually going to really work with something as large as Ethereum. I see so many things that concern me. So I try to be, I'm not going to pass judgment until it happens. I'm not convinced yet, because I just haven't heard too many compelling reasons, unless you are a early buyer of ETH as part of the pre-sell and you're a major holder, or you've acquired a ton of ETH and you are going long on that bullishness that it could be a bigger thing. But short of those two parties, any other participant in there is probably looking at it like, man, there's a lot of missed promises here, man. It's 2021 and it's still not proof of stake. The merge will come, maybe. There's no withdrawal. Sharding got pushed off. Polygon kind of took over Matic. I mean, Matic Network's really the layer 2. So yeah, I mean, ETH's got it, but there's a mountain of developers behind ETH. There's a huge amount of knowledge now that are 5+ years old in Solidity and Golang and EVM development, smart contract development that's created massive multi-billion-dollar networks. So there's this it's just like this grand struggle where a lot of the brain trust is in Ethereum and not in UTXO development on layer 1 stuff with like Bitcoin and Lightning and that layer 2. Most of it's in Ethereum. So a lot of the development, there's a huge, I don't want to call it too big to fail, but there's a huge amount of effort to make sure that people are going to take hits and take hits and take hits. And at some point, does it sour it, or do they just learn from it and it gets better? So I'm kind of like not fully convinced, but like I also understand the mountain of development behind it too. There is Michael Mahira. Percentage chance that you put $1 on Ravencoin in 2022. I don't know about $1, my dude, but like, so I tried to tackle this in the mining model with Ravencoin, and I was trying to take it on previous data with related to something that looked and felt like it, which was Bitcoin, on same basic code base, adoption models a little faster because it's a known state and people know what cryptocurrency is now. First halving coming up to Bitcoin, we did overlay those in the mining model. I had to start it a little out of whack because there wasn't a huge amount of good price data for the first like couple months in Bitcoin, short of some forum people trying to do like OTC trading. But when you first started looking, it was about a year into it actually, from to the end of 2010, the beginning of 2011. So when you take that price data with division from 21 billion coins to 21 million coins, Ravencoin right now is almost on par with its performance to the way Bitcoin performed, proportional to its size. when you run that overlay and you look, when Bitcoin would hit $11, that would put Ravencoin at like $1.10, if that makes sense. So I think it was 10 cents. So when Bitcoin hits $100, yeah, then it would put if they were proportional, when Bitcoin hit $100 ish, it would have been proportional to Ravencoin being $1. If it was all there, if it performed, I put it in there as like, let's say it went half the performance of that, because it's still built on the same principles, halving schedule, 21 billion versus 21 million. That would put Raven in 2022 as high as $2.12 if it was performing as high as Bitcoin did on its first run up to $212, Bitcoin being, that would put Raven at $2.12 or something. So if it halved that, if it halved its performance, because there's a lot more liquidity in the space than there was back then, there's your numbers. So you look at what people invested in Bitcoin at the time, right? When what was available in its first halving, because remember, it's completely proportional. 21 billion to 21 million. So a $200 Bitcoin price after its first halving was a lot of money. That ecosystem was huge, and a lot of money, right? $212 after its first halving was quite a bit. So there's just so much more liquidity in the space now. There's so much more access to put money in it. So will it perform the same way? I don't know. I mean, I'm just looking at previous history and then what that happened. So I've kept it more around the inverse of what, for your inverse bros, of Ravencoin being the second, teetering off the second most popular proof of work mining coin next to Ethereum, and trading blows with Ethereum Classic. What's that put it from a price action standpoint with all access to all that liquidity? And are people going to go long on it? And is there enough inertia behind it to really drive value to that, which then will create a whole bunch more interest in it, where there will be more development on the space and the kind of ecosystem around it, because it's not just about protocol development on a particular coin. It's also all that ancillary benefit of creating features and functions on top of it, interfaces, wallets, accessibility, that sort of stuff. So it's got a lot more of that than what Bitcoin had initially. And the same thing with like the way Ethereum performed in its first few years. So, I mean, yeah, I don't see, based on all those dynamics, that it doesn't hit the 50, 60 cents, probably leading up to it, which then would be where it needs to be. And not saying that it needs to hit that, but where it would need to be for taking over Ethereum's transition, just because there's so many more Ravencoin produced per block, that a 50 cent to 60 cent Ravencoin handles 600 terahash moving over from Ethereum, because that 600 terahash actually is equivalent to probably around 300 terahash on Ravencoin, it's at 7 terahash right now, 8 terahash. So it would be a significant, about 300% plus increase. But you would have, 50, 60 cents, it'd be proportional, right? So, yeah, I mean, I think some people are going to kind of buy the news, sell the event, possibly. We've seen that a lot with halvings. We've seen that kind of with Litecoin's halving also has the same dimensions, and people could point to that and say, hey, Litecoin had a peak at $330 in December of 2017. It peaked back up to close to a little over that, and now it's in May, and now it's back down to 160, 170, might be even $180 right now. And it's had a couple more halvings too, so what gives on that? But I mean, that's still significant performance after a few halvings with Litecoin compared to when I was mining it back in the day at $3, right? So like it's went up, 20x, from that. So Ravencoin started off pretty high, and it had a pretty good following there for a little bit. Remember, it was like 1,200, 1,300 Satoshis, right? And we're at what, 300 Satoshis? So a 4x, I don't think is, I mean, a 4x versus US for 4x to get it up to where its previous levels were on Bitcoin, its Bitcoin valuation, when you talk about the exchange there, it's still got at least a 4x room to try to get past its all-time highs versus Bitcoin. We'll see. Hopefully that wasn't too much of a ranty. I mean, this is an open agenda tonight. Thoughts on Firo coin after ETH2 or Ergo ERG? Yeah, so Firo is going through an algorithm change right now. It's going to a Prague proof of work variant, I believe. I did get a message from somebody on Discord that might have been one of the developers on there asking me to take a look at it. But I think they're going through a hard fork right now and algorithm change right now. I did cover Ergo earlier with some of the concern. Michael Anderson coming in with a 50 spot like a boss. Came in late, gonna have to run back and see what I tried to miss. Thanks again for being a boss and love what you're doing. Nice. Just got past 150 GPUs. Long ways to go. Like a boss, my dude. 150 cards. What kind of GPUs you running, Mike? That's sweet. 150 cards is a lot. That's when you start getting into an area that's like you got to go past your house. It ends up at around 70 GPUs at the current. I remember we were at close to 30 on the 390s. So back in the day, it was like close to 30, maybe 32 GPUs. I think it was. It was four or five. It was 6 card rigs. So we were at 30. 6 card rigs. There was 5 of them, and I was tapping out the almost 200 amp. Actually, most homes have 200 amp, at least in the U.S. And at that time, the R9 390s, I remember doing like 5 6 card rigs, and I had like 4 or 5 20 amps to fill the rest of my box out, and it was just like I was tripping the main, like it was just pulling way too much amperage. So yeah, if you're at that 150, you're probably running another couple hundred amp. So that's a pretty extensive setup, my dude. Congratulations on your build. I did speak. Colt's asking if I speak about Ergo. I did. I mean, I think from the limited research that I did, I think the development team's trying to do the right thing. But I have a problem with when it's built into the protocol on feeding feed money into a dev fee. There's so much, like if a team comes in and does the work and really like is building innovation, having open meetings, getting people excited about the token, and they can drive fundraising in different ways that's not built into the protocol. Because like if the coin goes way up there, it's such a windfall. It's just a misalignment on the incentive side that just kind of concerns me. What's your opinion of ETC? Consider moving my hash there. So ETC is still it's still developed. It's still got I don't want to call it the kind of pre-testnet for Ethereum because it definitely isn't anymore these days. But they addressed in their Thanos update the risk on the 51% attack. That was a first big move step forward. I think most of the SHA-3 discussion's been qualmed. I could be wrong on that. On them pitching the algorithm change. It has everything to gain from Ethereum. If Ethereum 2.0 has significant issues, you effectively have Ethereum still running an ETC. So as long as the interoperability is just night and day. I mean, it's literally probably a week from being able to spec up and hard fork and make sure that it's like the last state of Ethereum. ETC has everything to gain if Ethereum has issues. So I can't imagine ETC not being successful if it leans into that and really pitches itself as kind of the backup plan. Sean Hill with that 20 spot I missed earlier, man, like a boss, my dude. Sean Hill's a longtime supporter. You guys, Sean Hill's done. This is some of his great work right here, my dudes. I would say I don't trust ETC. I mean, I've mined ETC since the beginning. Since after the fork, I supported ETC. I talked about ETC. We mined ETC for a long time. It sucks that it was very slow to react to multiple 51% attacks. And I think it's like steering a large ship, and especially in a decentralized or an attempt to be a decentralized entity where you're trying to effectively do exactly what the Ethereum team did and named appropriately their kind of side quest stuff, the Ethereum cat herders. It's like herding cats. Like you're yelling at them and telling them to get somewhere, and they're just not listening to you. And it's really hard to align people in that way. You really need. You can have an open structure, but you still need structure. And that's part of the problem with a lot of the decentralized setups, especially if people are volunteering their time. And if you put too much pressure on open source and people volunteering their time, they can hit a kind of an inflection point where they're like, you know what, dude, this isn't worth it. And then you lose them, and you don't want that. So it's this kind of balance when you're trying to do open source development, to not disenchant, and most people have to have pretty tough skin, and hopefully they can take criticism in some way. I mean, but it just took Ethereum Classic a long time to adjust and get a solution, and they polled, several people. Charles Hodgson came in and gave his 2 cents, so you can take it or leave it with ETC. However, understand where they are sitting in the stack. They have everything to gain from Ethereum moving to 2.0 when it comes to a 1.0 version of pretty much where Ethereum left off. Smart contracts, DeFi networks, structure, all of that stuff, proof of work driven. So if proof of stake ends up having an existential issue that isn't an attack vector that they really saw that would play out, or there's some kind of other, because there's a shared architecture when it comes to the keys and the slashing, and forbid if somebody is able to exploit that and then cause like a slashing event when it's not supposed to occur, any kind of that kind of thing, when you've created that overhead on the protocol, and it would be largely a big issue, and now you have to have another hard fork for Ethereum to try to fix that kind of thing. Those are some of the big risks with moving over to changing the fundamentals there. ETC has everything to gain again, because it's the same architecture, same developers. So if you think about it from that way, when I say it has everything to gain, understand that if the lifeblood of an EVM based Ethereum architecture from Golang and Solidity and all that brain trusted development is disenchanted in some way with Ethereum, they can transition right over to Ethereum Classic and they don't miss a beat. It's like having that same discipline, right? So that's why some of the other coins like Ergo and the ones that have interoperability with Solidity and smart contracts and stuff have that advantage to hire people that have worked on Ethereum projects, and you have that kind of software baseline that people can go back and forth for. So there is some opportunities there for ETC post this. Do you think RVN will overtake ETC for miners? I mean, it depends on your metric. So here's the other part of ETC that I didn't talk about. Is ETC has also the opportunity to inherit most of the ASIC infrastructure that's on Ethereum right now. So if Ethereum Classic repivoted in a future hard fork, the algorithm to make it as close back to ETH hash as possible with like the mess, I forgot the first part of it, but it's exponential subjective scoring, which is the way it does its 51% attack protection. If they went back to ETH hash, they overnight could inherit 150 terahash of the miners, the ASIC miners, because the ASIC miners have nowhere to go after Ethereum goes away. Because you look at the current spread right now, you have Ethereum Classic has ETC Cache with some modifications. I believe the E3 still works with it, and then you have like Ubik, eGem. There's a couple others that are like very low liquidity. So you have all of these stranded ASIC machines that were built for Ethash that somebody's going to look at that and say, there's a lot of potential network protection here. Do they pivot to Ethash to hope to gain all of those new miners? ETC has that option. They're the best suited for it without a huge, massive change. Will they do that or not? I have no idea. I just understand the positioning and the pitch if they were going to try to do that from a network security standpoint. I see some people going back and forth. That I'll go back and see. So I love the little side discussions going on here. Wish you had the whiteboard instead of the blackboard. Is the blackboard annoying back to you guys? I can always change that out. The reflection. I've tried a few different things back there. The whiteboard, the problem with the whiteboard is the reflections, but this has a pretty bad reflection too. I usually come right over the halo here. Like a little halo. Above my head and start tripping people. So what's your guys' opinion of this kind of format? Like every once in a while doing one of these. I haven't done one of these in a while. And also I was thinking about having another channel on. If I get like Son of Tech or Vosk or anybody else that you can think of on here. I saw Red Panda. I saw Fox Crypto on here. The blackboards are super annoying. I do have a green screen too, but I don't know how that. I don't know. But see, then if I put a green screen up there, then somebody's gonna record this video and do like bad things and put things behind me and stuff. See Nemesis on there. You guys like the live good? Yeah, Son of a Tex is doing pretty good. And I just actually booked CES for this year. So I'm going to be doing CES this year again. The place that I bought out there, well, it's kind of like a timeshare setup, but I just booked that. I could only unfortunately get a couple of the rooms. I'm trying. Usually I have a 4-room penthouse place out there, and it looks like only 2 of the rooms are available. We're trying to get the 4, but I was going to invite a couple of the other channels out there, and that way they would have somewhere to stay at CES, which is probably one of the biggest cost factors out there. And I've already made the investment to make sure that I always had a place out there during CES because I got tired of spending that first year I covered CES for you guys, it was like, I want to say like 800 and some change a night and for 5 nights. And then the next year it was 1100 a night. So I was like, you know what? I can buy a place out here for this kind of money. So please, no green screen. You guys don't like the green screen? It's annoying. So yeah. Green screen, no. So yeah, we'll have yeah, do you guys are gonna be I'm gonna see stuff on Twitter now with all kinds of fun stuff in that. But yeah, I was gonna try to get one of those guys out there. That way they have a space to kind of launch from and we can get different perspectives at CES. There's a ton of good stuff at CES and there's a whole slew of crypto stuff this year out there. When I see oh my gosh. Superman. No dudes. Green seem fake for me. So I got the green screen originally because I was going to do kind of an education series in there, and I was going to have the graphics behind me. A lot easier with a green screen. Was it wise to buy 14 GTX 1660 Supers MSI? Mining them with nice hash. I mean, those are good cards. 30 mega hash, Ethereum speed. I can't remember off the top of my head what the Raven performance was. Maybe 20 mega hash, 18. Where is CES this year? Says Sir Mines a lot. I love that name, my dude. It's in Las Vegas. So the CES is the Consumer Electronics Show. It is one of the largest like tech events on the planet, actually. And it's usually every year at the first week of January. And it's not like for open for public. It's like you have to have either a company or a business. You can become an industry partner. I go out there as media. So I got a media badge and a crypto. They give you a thing called Key Online Influencer if you're like a YouTuber or any of that. But I go out there for the media days and get to meet with people and talk about tech and hardware. When I first started going out there, there wasn't a ton of stuff. There was just one crypto track out there, and then now it's like there's a huge amount of crypto stuff out there. So it's pretty cool. I've done like if you guys look up like if you just go to the YouTube, type Bitsby Trippin space CES, you'll see some of the live streams that I did there, walking through for like 2 hours, talking to people and stuff with it. It's pretty cool. I like bringing you guys through it. 1080s Ti's are still beasts and Radeon 7s. Radeon 7s are amazing. The problem is their fail rate. And I don't know anybody else that's been mining with Radeon 7s. The fail rate's pretty high. We've had quite a bit. I mean, we had, I think, a total. I'll have to talk to BBT Todd again, but I want to say we had maybe 9 or 12. We had 12 Radeon 7s, and we've had 4 die. So, and we run them a little slower just to not put the overhead on them, and we've still lost 4 of them. What other gatherings happen the same time at CES in Vegas? So there's a whole bunch of so Coin Agenda is usually at that same time. So Coin Agenda had something going on last year or a few years ago. That was at Mike Tyson's house, which was awesome. Or it was his ex house. It was like his house in Vegas that somebody either rented or bought, and it was pretty sweet. I covered that. That's one of the videos. The Miners Disrupt, I would highly recommend. That was a great time down in Miami. If you guys ever get a chance to do that, I went down there. It wasn't. So we got comped the tickets to Miners Disrupt, but like we paid for everything to fly down there and everything like that. So it was they just gave us media tickets. Most of the events that I go to usually, like I'll go to try to buy, like I did North American Bitcoin Conference, we would just buy the tickets, but then they're like, hey, we cover media. So when we're covering the event, effectively most of those tickets are comped, or sometimes they'll work a deal with us to where we can give you guys like discount codes for stuff. But there's no big mining conferences coming up until next year. I think right now the Miners Summit and then Miners Disrupt are the 2 big ones. I'm trying to push my buddy in the space for a long time, Marshall Long, to do a Hashers United again, which is just, it was very centric around like mining and configuration. We had hardware vendors there. They had, like a hackathon when it came to like, how to set up a pool, all that kind of stuff. Like if you were interested in understanding on how development specific to mining, like how does a mining pool configure a pool to create a block, right? That kind of stuff. If that kind of stuff interests you guys, definitely drop it in the comments below. And I can take that back to some of those organizers and see. I found it very interesting because it's like things that you normally wouldn't hear, and you kind of hear it from the mining pools themselves, and they kind of like lay out like how this works. Because remember, it's like it never hurts for people. I've always lived by this philosophy. I do this at the day job and everything. Is you should always be able to give people the recipe and the ingredient to everything, but not a lot of people know how to cook. And the people that know how to cook has usually done that through some level of iteration. So you should always be super transparent, open source, let people review code, take the critical criticism, learn from it. But the executors of that code, the people that are actually building it and changing it and deploying it and all that kind of stuff, that's the people that are cooking. So it allows for so much more of a richer experience, and you're going to get a lot of you got to work through the noise of it like anything else. It's kind of like a Cunningham law type of thing. If people don't know what that is, it's like when people will say something that they pretty much know is false to get the correct response from people online. So you're like, I'm going to say something I know is wrong, but I know I'm going to get the right answer from somebody there. You got to be careful with some of that and dealing with the noise on that and not getting back and forth with people on that. But yeah, recipe ingredients should be out there for people. It's always worked well for me on that. All right, my dudes, we're about an hour and 17 minutes in. Hopefully you guys thought this was interesting. I didn't want it to go too long. I mean, tomorrow is going to be, I think, a good video you guys will like. We'll have what I'm going to call BBT Ray, starting here new and learning the ropes from ground up. And we're going to be taking you guys through that experience. So somebody that's completely vanilla, brand new. And then I will catch you guys on the next one. All right.